Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Wall Street is seeing red today, the first trading day of September. Historically, we know this month has been known to be the worst performing. At the end of Tuesday's session, all major indices did end the day lower. And workers may not be making big salary leaps by hopping from job to job. We're taking a deep dive into new career and workplace trends. And prenup agreements aren't just for celebrities and the uber wealthy. We're taking a look at what you need to know before you tie the knot. Well, nearly half of full-time workers, or those looking for full-time employment, say they are likely to search for a new job in the next 12 months. That's according to a new Bankrate survey. But for workers going from job to job, Bank of America highlights what job changers may expect to face in the current labor market. For more, we have Bank of America Institute economist Taylor Bowley. Taylor, it is great to see you. So you did some research on job hoppers. First, explain to us, kind of big picture. As an economist, Taylor, why do you study job hoppers? Why that metric? What are you looking for there? What does it suggest about the labor market more broadly?
Yeah, of course. So I think right now, especially what we heard from Powell at Jackson Hole, he cited some downside risks to the labor market. And it's easy to look at an unemployment rate, look at payrolls, what we're seeing there. But some of these more under the surface questions around what are people doing in terms of looking for a new job, or people changing jobs as frequently, as well as the pay raises they get from them, is kind of telling to see to what extent we might be seeing a slowdown in the labor market.
And so what are you seeing with job hoppers? What does the data suggest?
So our data, which we look across over 69 million consumer and small business accounts, so it's a pretty powerful data set. And what we found is that there's been a moderation in the number of people that are changing jobs, the job change rate, and it's only up 2% from 2019.
So they're hitting pause.
Yeah, exactly. And on top of that, let's say, hypothetically, you're looking for a new job. Most people, when looking for a job, think, okay, what pay raise am I getting with this job change? And so you might say, that'd be great if I could get 10%, which is what we saw in our data back in 2019. Now we're seeing that around 7%, and compare this to the Great Resignation period, where it was up more than 20%.
Is there, when you try to look under the hood there, Taylor, and explain that trend, what would be some of the reasons?
Right. So we're seeing generally an uncertain economic environment. That's weighing on people looking for a job. It's weighing on those that are making the hiring decisions.
This is sort of tariff-induced uncertainty.
Yeah, that's definitely part of the equation.
Yep.
And on top of this, we're just kind of seeing the power dynamic shift back to those employers, as opposed to what we saw in 2022, when there was a lot more power in the hands of the employees, those looking for job changes. So really what we're seeing now in our data is that changing jobs has just become less lucrative.
It's become less lucrative. Are there sort of demographic differences to call out when it comes to the job hopping theme?
Yeah, so we're able to look at pay frequency when looking at job change rates. And what we're seeing is for those that are in professional services, so think finance, think information, it's more difficult for those white collar workers to change jobs. And then on top of that, in official data, we're also seeing younger generations experiencing a higher unemployment rate than they did pre-pandemic.
Why is that?
Yeah, it's an interesting question. So part of the reason that we think that is there again is this question of, okay, uncertainty. There's also our B of A global research teams are citing there could be an AI impact here, especially in those professional services area, potentially crowding out some of those entry-level positions.
I see. So one theory might be that AI is already impacting certain sectors, or at least entry-level positions that would be hitting younger folks.
Right, and so on top of that, we're also seeing within our spending growth data, within our wage growth data, some divergence between also lower and higher income households. And at the end of the day, the labor market is so key to understanding how overall consumer health is doing, because at the end of the day, the money that you're bringing home is going to determine what your budget is, how much you're spending, what you're spending on, and the overall impact to the economy.
What about the big jobs report this week? I'm curious, what do you all think is coming? What do you expect to see and hear?
Yeah, I think all eyes are on the job report this Friday. And what I would say is what we're seeing within our data is really confirming that we're seeing some of that slowdown, some of that moderation, the cracks beneath the surface in the labor market. But I would point out that we're still seeing, again, it's come down, but 7% still a positive number. We're still seeing an increase from what we saw in 2019 when it comes to job change rates. So there are still some positive indicators out there.
As economists, do you think you all can have is it possible to get a good firm read on the health and resilience of the labor market, Taylor, when you have some of these big policy shifts that are occurring, like Trump's immigration policies and the reversal there?
Yeah, I mean, it definitely makes our job, we got to stay on top of it. But again, because we have over 69 million consumer and small business accounts, that's a whole treasure trove of data. And what we're seeing is pretty real time. So that allows us to better understand and gauge how consumers are doing, how small businesses are reacting to things such as tariffs. And what we're seeing is, again, slow down, but there's still positive growth.
All right, Taylor, thanks just so much for your time today.
Yeah,
Appreciate
of course.
it.
Thanks, Josh.
Stick around, much more Ask for a Trend still to come. Breaking news to tell you about right now. Google not required to sell its browser Chrome as part of a long-anticipated antitrust case, and investors paying attention. Alphabet jumping in aftermarket trading on the ruling. Decision coming from a federal judge Tuesday. Our tech editor, Dan Howley, is following the case, joins us now with the latest. Dan, your thoughts here?
Yeah, this is an interesting ruling. There's some changes here that Google has to make, but it's not the most devastating that it could have faced. The company, as you said, will still be allowed to operate Chrome. It also is not barred from entering into agreements with companies like Apple, where there's a revenue sharing element. So Apple's also up on this news as well. That was a big deal for Apple because it receives about, in 2022 at least, it received about $20 billion from an agreement to make Google the primary search engine for its browser, its Safari browser, as well as its Siri search. So this is a big deal for Apple as well. But for Google, they are barred from certain activities. That includes making its Play Store available if and only if a company also uses other Google apps on their devices. So that's something like Samsung may not have to actually use all of Google's services or a number of Google services just to get access to the Play Store. Similarly, it can't require companies to put to access a certain Google app if they also have to use another and would receive payment for it. So there's some provisions here. The company also has to share some data with competitors, but not necessarily all data. It does appear as though this is kind of a almost win for Google in the sense that, as I said, the worst aspects of what could have come to pass have not.
Dan, I know you've been following this case closely. Investors, it would appear, are surprised and pleasantly surprised, just looking at the reaction, the responses you mentioned in Alphabet here, in Apple. Are you surprised by this one, Dan?
I think that for the way that this case seemed to go and the ruling itself, that they were found to be a monopolist in this market, and then hit with their other case in the ads case, and also be found to be a monopolist in that space. It just seemed as though things weren't going Google's way or Alphabet's way. So I think maybe the market thought that, look, we might as well hedge and think that things are going to be as bad as possible. But I think that may be part of the reaction here. Having to sell Chrome would have been a big deal for Google. Obviously, it's the most popular browser out there, and with Google being the primary search on there. One of the other interesting things is the company doesn't have to provide kind of programs where you would automatically be able to pick, so like an option box when you sign into Chrome, something along those lines. So that's something to kind of keep in mind, just because it'll allow consumers to continue to use Chrome, which obviously will help Google. And then when they use Chrome, stay in Google search. So this seems to be a lot of benefits for Google here, but there are some benefits for obviously the DOJ basically saying, the prosecution on this side basically saying they do have to share some of their data with third parties.
Dan, thank you. Appreciate it. Well, President Trump's tariff uncertainty rattling markets. U.S. stocks closing lower in the first trading day of September, kicking off what is historically the worst trading month of the year. Yahoo Finance's Jared Blickry joining us now with the market takeaways. Jared.
And that is takeaway number one. It is an ominous start to an ominous month, the ominous September. And just as a reminder, I broke this down a little bit earlier today, but I'm going to show you one chart, and this kind of encapsulates the big picture here. This is the S&P 500 monthly returns, and we're using the median instead of the average, but this goes all the way back to 1990. What you notice here, September is the only negative month. And what you'll also notice is that October is pretty big, and November is the biggest here. So the two best months follow. However, I also demonstrated that VIX seasonality moves upwards. And so you have a bullish VIX that gives you the potential for a crash or something of that nature. I don't want to be alarmist here, and that's not the purpose of it. It's just to be in the back of everyone's heads that this is the time of year when you want to be a little bit more careful. And this is the S&P 500 today. I'll show you a real quick chart. You can see, well, this is actually the last 3 months. So in the big picture, what we saw today, 0.7% to the downside, not really disrupting the long-term trend at all. And then if I show you what's happening with the VIX here, there we go, up to 17. So it's not a disaster, but you can see this is the highest level that we've had since early August. We actually began August, if you remember exactly 1 month ago, with a pretty bad down day. So something to keep in mind here, just a yellow warning flag, nothing too big, but we want to keep it on our radar.
Stocks were down. What was up?
We got to take a look at the dollar and rates. And this is interesting. The dollar having its biggest jump in a couple weeks now, and also seeing rates head higher to some pretty big levels that I'm keeping track of. We'll begin with the dollar. This is over the last 3 months. So here's the jump that we saw today. And you'll notice this is a sideways trending chart. Now, it depends on your time frame, though. If you look at the year to date, you can see we have been camping out at the lower end of this chart for some time. And I've said many times that the pain trade is to the upside. That's because Wall Street is very bullish, bearish on the dollar. In fact, most people are bearish, given what's happened with tariffs and everything else. They might be wrong in that, but the pain trade is to the upside. So if we saw a big jump there, that's something that could hurt investors. 30-year yield is the big rates market that I'm looking at. Just to show you, let's dial this back down to a 3-month chart. There we go. This is the highest level that we've seen since about July. And I would say, too, I would add to this analysis, anytime you get up by 5%, when it crosses that threshold, big psychological number, or 5.1% to the upside, that's when we tend to see that kind of activity in the bond market spill over, and you see equities roll over a little bit. So we've been here before. That was at July that we were just looking at. Then in May, we got it at 5.1, and we've been here last year as well. So something we want to keep in mind there. So you add up the yellow and yellow, maybe you got an orange warning flag.
I feel like we should talk about the yellow metal while I have.
Yes, let's do that, because I was watching gold. Gold has not just hit yet another record high. And by the way, silver is breaking out too. It is, gold just had its best day in several weeks, if not several months. And let's get to our commodities heat map where we can see the price action, and we'll dial that up. And here we go. Gold is up 2.4%. That's a decent amount for gold. But if I put the year to date on, that was just the intraday, you can see we had this big consolidation here, had kind of a pennant formation, and then we broke to the upside. And I love the saying of Ralph Alcampora. He's a CMT, chartered market technician, also called the godfather of technical analysis. The longer the base, the higher in space. And so, is gold going to the moon? That's a Wall Street bet term. But 3,600 is definitely a record. Haven't seen that before. And I got to think, given the length of this base, gold probably heading higher, unless this is a false break to the upside, in which case you'd see it reverse to the downside over the next couple of days. I'm not too worried about that. As long as 3,500 holds here, we're probably seeing much higher gold prices.
Want to do a quick final check on Bitcoin?
Let us do that as well. I thought it was really interesting today because stocks were down. This is a year to date. Let me just dial this down to an intraday. Stocks were down, and Bitcoin has typically been following the price action of stocks. Nevertheless, Bitcoin was up today, also on a day that gold was breaking out. So, question to myself is Bitcoin breaking its historical correlation with stocks right now? And because Bitcoin correlations, they shift over time. So maybe Bitcoin is becoming more of inflation hedge, Armageddon hedge. I don't want to put too many thoughts in people's minds, but nevertheless, I think the bulls will take that 111,000 in Bitcoin.
Thank you, buddy. Appreciate it. Stick around. Much more Ask for a Trend still to come. Taylor Swift and Travis Kelce's engagement has the world buzzing. And sure, some of it's about the ring and the music star finally finding forever love, but a lot of the conversation, we know, quickly turned to something else: a prenup. A prenuptial agreement, or prenup, is a contract couples sign before entering a marriage that lays out how assets will be handled in the event of divorce or even death. Speculation makes sense. Taylor Swift's net worth is estimated at $1.6 billion compared to Travis Kelce's $70 million. That's according to Forbes. That's a big, if enviable, gap. But one of the biggest misconceptions about prenups is that they're only for the rich and famous. Well, our next guest says that's not the case. Here to talk about how you might benefit from a prenup is Lauren Crane, partner at Bender & Crane. Lauren, it is great to see you. So a lot of folks, Lauren, might think, they hear prenup and they think, well, that makes sense for the very wealthy, but not for everybody else. Is that true?
No, prenups can be used for anyone. If you have a business that you've created and you're trying to make it, you've worked on it for years and now you're getting married, you may want to protect what you've created before the marriage and agree that only the increase in value of the business may be marital. When you're doing a prenup, you decide what would be marital and what would be separate. So you make your own course of action when you get married. It's like a choose your own adventure book when we were kids, right? So your attorney will give you a few options. Here's what you can make marital, here's what you can make separate assets, here's what you can do with spousal support, and then you give the client or the couple the options, and then they choose how they wish to proceed with regard to how they want the laws to govern their marriage.
And Lauren, what would typically go into a prenup?
So typically, you decide assets that I have prior to the marriage are my separate property, and here's how we can share it, or here's how I can protect it. Assets that we acquire during the marriage are either going to be considered separate property of the person who earns the money or however they've accumulated the assets, or it could be marital. You can also agree on how to divide those assets. So there's community property states, and then there's equitable distribution states. In equitable distribution states, it's an equitable division of assets, so it's not necessarily 50-50. So you could agree that all those marital assets are divided 50-50. You could also decide how you want to treat spousal support. So whether you're going to waive spousal support upon a divorce or how you're going to calculate your income for spousal support. And so you can decide that. You can also decide what would happen if someone were to pass away while you're still married or after the commencement of an action. So you can decide so many things in a prenup, and it can really work to both of your advantages.
Let's say I'm a viewer, Lauren. I'm listening to this right now. So, Lauren's making a lot of sense. I'm going to get this prenup. If I go to a lawyer, how much am I looking at to get this prenup? Can we put kind of a broad figure on it, roughly?
So I can't really put a broad figure because every attorney costs a different amount. But I can tell you that if people talk, the couples talk about what they want to put in the prenup, and they decide together and they work together to figure out what they want in the prenup, the cost of the prenup will go down because you're dealing with your attorneys on much less issues. So the more that the couple can talk and agree, the cheaper the prenup.
How long is the process usually, Lauren, or can it be to get this done?
So typically it could take, a few weeks to do a prenup, or it could take several months. It depends on how much the couple talks to each other, right? So if two attorneys are dealing with a prenup and they agree on the concept, you need the parties to agree. And the more the parties can work together, the shorter the line.
Are there risks to doing a prenup? I think a lot of people, Lauren, probably think, maybe it makes sense, but I kind of don't want to broach it because I'm worried it's going to create some relationship tension or strain.
So everyone asks me that question, and I want to say, before you get married, you think that you're going to walk into this marriage and then you're never going to have to talk about money. The day after you get married, you have to figure out how much you want to pay for rent, whether you want to send your kids to public school or private school, how you want to spend your money. Do you want to save this amount? These are just conversations that you can get into before you actually get married. Everyone thinks that once you get married, all these decisions are made. Yet, once you're married, these cause the biggest issues in a marriage.
Fair enough. Lauren, it was great to have you on set today. Thank you so much.
Thank you.
That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.